Hey guys, Ross Givens here with the Insider Report. Now, as you know, I track and follow the buying and selling of insiders, talking about CEOs, CFOs, executive board members, and follow the stocks that they're buying with their own money in their own account for one simple reason. They know more than anyone else. Well, the last several weeks, in fact, the last couple of months, there's been very light on the insider buying front. This is not unusual. When the market makes new highs, they tend to buy a little less because insiders have a fantastic track record and a long history of buying when prices are cheap. But there are exceptions to this rule. I just came across a super exciting opportunity I want to share with you right now. Take a look at this chart. Now, this is, by definition, a penny stock. It is currently trading for around 63 cents a share. This is a small staffing company with a tiny market cap. The thing's only worth about $12 million, so it is a micro cap stock, and here's what's going on with it. They recently did a secondary stock offering. What a secondary offering is, it means they issue additional shares of stock in their company to raise money, in this case, to pay off $58 million in debt. So anytime you do a secondary offering, the price comes down because you're diluting these shareholders in existence. If there was 100 shares and now you issued 100 more, well, each of those shares is now a smaller percentage of the company, so the price comes down, it's worth less. That's normal. However, I think this reaction is overblown in the case of this stock, and several insiders agree. In fact, as soon as this drop happened, they started buying. 3 so far: a high-level director, the chief executive officer, and the senior vice president and chief financial officer have all gone into this stock for around $100,000 a piece, right down here in a 60-cent range. And look, this stock was trading $1.20, $1.40 just 2 weeks ago, and this was a $2 stock just a month ago. So when you get a stock at 63 cents, it only needs to move 20, 30, 40 cents for you to get a pretty good return in terms of percentage. Now, as I've gone over before, insiders tend to buy the stock when the price is cheap, when it's trading at an undervalued price, meaning the company's worth a lot more than it's trading for, and that's what I think is going on right here. Each of these insiders is buying for the first time in their career. They're making large purchases in relation to their personal salary, so everything looks really good for this trade. And I've just recommended it to Insider Report members. Again, it's 63 cents a share. So we got a big upside on this one. Could easily see several 100% over the coming months, and I want you to get in on this trade. So if you've not yet done so, there's a link below this video. I've got an on-demand trading session where I walk you through the ins and outs of my insider trading strategy, something I've been doing for more than a decade, honing and perfecting this method. I'm going to show you how to find these trades, why it is 100% legal, and how to find the best trades, things like cluster buys and first-time buyers, both of which we have right here, and the trade setups that have proven to work the best and generate the best returns. So go ahead right now, click that link below this video, learn how to become an Insider Report member, and get your hands on this fresh pick that hopefully can pay for your subscription in a short amount of time.